Welcome to the broadcast desk. We need to have a very serious conversation about the most powerful, undefeated, and mathematically guaranteed indicator in the history of modern finance. I am not talking about the relative strength index. I am not talking about moving averages, and I am certainly not talking about Fibonacci retracements. I am talking about the legendary inverse CRAMER effect. The title of tonight's monologue is Ripple XRP Jim Cramer Save Us. And if you are currently sitting at home, sweating over the daily charts with XRP hovering in the agonizing $1.40 range, you understand exactly why this desperate plea is echoing across the entire digital landscape. The retail sector is utterly exhausted. They have been battered by regulatory delays, macroeconomic headwinds, and engineered price suppression by Wall Street market makers. They are looking for a savior. But here is the brilliant satirical twist. They do not want Jim Cramer to bless the asset. They are literally begging him on national television to completely destroy it. They need the Mad Money host to look directly into the camera, slam his fist on his desk, and declare that Ripple is a complete failure and XRP is going to zero. Why? Because the moment those words leave his mouth, the cosmological laws of finance dictate that the asset will violently explode upward. It is the ultimate contrarian buy signal. Every single time he tells the public to sell, the institutional cartels take it as a massive green light to back up the truck and load up their heavily fortified vaults. We are currently trapped in a highly manipulated consolidation zone, and retail traders are utilizing humor and satire to cope with the sheer psychological torture of the waiting game. They are desperately trying to summon the Cramer curse to break the algorithmic suppression once and for all. But behind the memes and the desperation, there is a terrifyingly real structural reality. The market makers are deliberately keeping the price flat to shake out your holdings before the real macroeconomic move happens. Do not let the silence break your resolve. The save us plea is a testament to how manipulated the mainstream financial narrative has actually become. We do not actually need a television host to save the network. We just need the public to realize that the smart money is already saving themselves by accumulating your discarded tokens in the shadows. Let the television pundits talk. We will follow the money. Let us drop the late-night satire for a moment and look at the cold, hard ledger data that is actually driving this market, because the sovereign institutions do not care about television ratings or social media memes. While the civilian sector is praying for a reverse psychology miracle to push the price past the $1.40 barrier, the heavyweights are executing their strategies in complete, terrifying silence. If you bypass the public circus and look at the raw application programming interface data from the United States Spot Exchange traded funds, the accumulation is absolutely staggering. We are tracking monolithic asset managers, financial leviathans like Bitwise, Canary, and Franklin Templeton, who have successfully sequestered over $1.3 billion in physical cryptographic assets. How does $1 billion of concentrated buying power enter the arena without instantly blowing the roof off the spot price and triggering a massive public rally? The answer lies in the highly secretive, unregulated back alleys known as over-the-counter dark pools. These massive asset managers are not walking out onto the brightly lit public stage to execute their billion-dollar acquisition orders. If they did, it would instantly trigger a massive price explosion and completely ruin their covert accumulation routine. Instead, they are utilizing hidden liquidity providers to systematically absorb the discarded tokens of every panicked retail spectator who folds under the psychological pressure. To perfectly camouflage this massive resource grab, those same liquidity entities aggressively short the public futures markets. By driving the open interest into negative territory, they manufacture a highly convincing illusion of a brutal, unending collapse. The civilian sector looks at those metrics, assumes the asset is actively dying, and begs for Jim Cramer to do something, anything, to change the momentum. Meanwhile, the institutional cartels are literally backing up armored trucks to secure the floating supply at a steep wholesale discount. Furthermore, you must synthesize this dark pool illusion with the explosive scaling of the RLUSD stablecoin infrastructure. The legacy banking syndicates are hardwiring their cross-border liquidity operations directly into the Ripple framework. The mechanical burn rate is actively accelerating on a massive global scale. They are silently hoarding the physical float while the network simultaneously burns the remaining reserves. This is the exact cryptographic formula for an unprecedented, violent supply shock. The data simply does not lie. We must now elevate our focus away from the domestic television screens and examine the international chessboard, because the true momentum triggering this massive market setup originates far beyond the borders of the United States. The mainstream financial press operates like a highly coordinated circus, deliberately pointing your attention toward trivial domestic narratives to keep you distracted from the global macroeconomic reality. While retail investors are tweeting, "Jim Cramer save us," out of sheer desperation, our international observers have intercepted critical contracts from the highest echelons of European and Asian financial empires. Weeks ago, we confirmed the highly classified integration of Ripple Prime into the National Securities Clearing Corporation directory under the undisputed heavyweight champion of Wall Street, the Depository Trust and Clearing Corporation. That precise tactical maneuver effectively hardwired the decentralized ledger directly into the absolute beating heart of the American traditional equity settlement machinery. But the new intelligence that confirms the massive building momentum is an unprecedented European convergence. We have empirically verified that Société Générale, the titanic French financial institution commanding nearly $2 trillion in global assets, has officially activated its MyCA-compliant euro stablecoin directly on the Ripple infrastructure. Concurrently, the Japanese banking leviathan SBI Holdings has successfully deployed a massive blockchain-based corporate bond specifically designed to reward traditional retail investors with physical XRP. When trillion-dollar sovereign banking entities voluntarily integrate a decentralized cryptographic ledger into their core operational machinery to settle corporate bonds and stablecoin transfers, it mathematically guarantees a tidal wave of future utility volume. The sudden, violent jumps in trading activity you see are the market algorithms desperately attempting to price in this massive international adoption before the retail sector realizes the performance has already been rigged in the institution's favor. The legacy financial system is actively crumbling, collapsing under the unsustainable weight of its own inflationary debt spirals, and Ripple is seamlessly installing the cryptographic fortifications on a global scale. The corporate media is actively deploying psychological countermeasures, broadcasting terrifying macroeconomic narratives to keep the public completely paralyzed by fear. Trust the raw intelligence of the hidden ledgers over the deceptive lights of the television studio. The grand finale is rapidly approaching, and the global infrastructure is fully operational. Prepare to execute your final maneuver before the heavy curtain falls, because recognizing the sovereign manipulation and the structural hustle behind this major setup is absolutely useless without a highly regimented strategy for cashing out your chips. We have empirically proven the covert dark pool accumulation by the billion-dollar exchange-traded funds, the exponential utility growth of the RLUSD stablecoin engine, the massive DTCC systemic integration, and the colossal international banking deployments. So what is the ultimate mathematical destination of this digital asset when the algorithmic illusion is permanently shattered? Highly classified macroeconomic risk assessments, continuously refined by elite quantitative analysts at Tier 1 institutions like Standard Chartered Bank, have established a mathematically grounded baseline target of $8 per token for the conclusion of this specific geopolitical cycle. To the uninitiated civilian spectator currently psychologically traumatized by months of artificial suppression, an $8 projection sounds like an impossible fairy tale. But to the elite observer who understands the absolute certainty of a violently constricting supply curve colliding head-on with exponential institutional utility bandwidth, an $8 valuation is merely a conservative operational waypoint. However, you cannot successfully navigate this high-stakes digital wealth transition without a ruthlessly disciplined, emotionless framework. Human greed and panic are the ultimate vulnerabilities in any theater of deception. You do not need Jim Cramer to save you. You need a mechanical exit strategy to save yourself from your own emotional reactions. I strictly mandate the immediate implementation of an automated execution strategy known as the Thirds Protocol. When the network price violently shatters the historical all-time high resistance parameter of $3.84, you must automatically execute a sell order for exactly 33% of your holdings. This unemotional maneuver secures a complete recovery of your initial fiat capital deployment, instantly transforming the remainder of your digital portfolio into pure, stress-free profit. The secondary operational tranche is programmed to ride the algorithmic volatility toward the $8 institutional target zone, serving as your primary mechanism for total financial liberation. The final tertiary portion must be securely encrypted and locked in your deepest cold storage vault for the ultimate long-term macro play. Secure your private keys offline immediately, execute your cash out flawlessly, beat the illusionist at his own game, and walk away a champion.